everyone, it's Chris from Axel as well as Solstice. You can find me on X, Instagram, Discord. Remember, we use this adaptive algorithm for the side market, up market as well as down market, as well as you can subscribe to the YouTube weekly video channel. It's for free for everyone. Share with your friends, give us your commentary, let us know how we can assist you, or if you want some minor changes the way we do the format on this weekly video. Let's go to the first slide that I have up here. And what I did, I put the S&P 500 as of April 8th, which was the Wednesday announcement, and the rally back up in that big candle, which gave us about a 12.5% yield return back from the March reversal. Because remember, when the tariff hit, Trump announced it, we were at 50.66. We lost that area, fell back further down. We rallied back and reclaimed that area. We're above it right now. We have to pay attention to the historical data. Historical doesn't mean that in the future we're going to get the same results, positive or negative. We're just taking an outlook, understanding each session or each bar on daily basis. How far can we travel? And how much percentage we can gain or lose when we act on a position, when we enter a position. For the swing trade, long term and the short term, can be a day, can be 2 days, can be a week, or so on up to 2 weeks. But the long term are usually quarterly, annually, semi-annually, and so on. So most important, I wanted to show the 2001 till 2008. I did not mark the 2008, but I wanted to show that the market can last for a very long time in a downtrend. So if I take a look at the 50-day, 40-day, and 60-day sessions, we do have negativity, but the average between the highest number and between the highest, which is 16.4, and the lowest, which is 13.9, we had an average yield of 5.1 on the max side, 5.9 average high, and average low 2.2. And on the 60-day session, 6.9 to 2.9. So we don't know what May can do for us, but we have to pay attention to China, the tariff, as well as the Federal Reserve Board and Jay Powell, what he's going to do with the rates on the market. So let's go to the next slide. And what I wanted to show you here, I put the quarterly, which each candle represent 3 months. We have 4 quarters in a year on an S&P, E-mini, and so on, or equities. So I wanted to show the February 18 high to the low of March 2023, the high of December, as well as the January high of 2022 and the low in October, the December high, then the January low to the 2024 till the high of 2024 highs. We looked above and we failed. If we look at the linear regression uptrend channel, we tested the October one, looked below it and bounced off. We held the 18 simple moving average. You can see every time we touched the 18, we bounced off. This time we did not. We got a nice reversal hammer on the quarterly chart as well as the monthly chart. So I marked those areas, the lows, the highs in this area here, but I did not mark the lows in this area or the lows here. And there's a reason why I want to show you how to look at the Fibonacci, is that because most people are talking about a recession. Is this sharp reversal going to take the market higher to be determined? And I said to be determined by the market gods. I usually say that in the room. So in our chat room, and people know what I mean by it. So let's go to where you can find us. We can find us at Solstice ATR. Get in contact with us. We're here to help. Give us your commentary and let us know what you think. Let's go to the first S&P, and what I did here, I put the monthly bar instead of the quarterly bar. I wanted to show the February to the low and the high. If I go get a measuring tool, that measuring tool is going to give me an identical movement. If I take this January high till the March 23rd, 2023, you can see every quarter, every year, we bounced off, but the 2022 was down to the 50%, rallied back up almost in 2023 to the highs, missed it by a little bit, and we took off in 2024. We looked under and went back up. And this is the Fibonacci on the annual basis. I do the long term. I use measured moves on the short, medium term, 1 year, 2 year, I use Fibonacci's for the level because they are a little bit different, the numbers. I use round numbers to make it easier for us to see on the charts. So this is the charts you can see where we tested and failed from and rallied back up. So now you know where the levels are. We had 1, 2, 3 times the distance we traveled from the March 23rd of 2020 area. If I go get a measuring tool and just mark it from low to high, if I take this area here, I mark it and I bring it down to here, that was 120% return. If I mark it to here, that was 160. And if I mark it to the top, that was 180 days. The monthly bars represent 60 bars from that day. So remember, each bar is a month bar, so this is why you're getting 60 bars on it. And this is where we are sitting today. Can we reset a little bit? Yes. The most important thing is to understand how to look at levels and take a trade without being biased. Remember, this is the S&P 500. Let's go now to the daily chart on the S&P. And what I wanted to talk about is this big bar on April 8th, which gave us the reversal. We looked down, rallied up, retested the 5100 and continued higher. And we got these two gaps here. This was the tariff gap on the announcement from Trump on 4/2/2025. We get this gap, we get this another island lower, then we reverse sharply. This area here of this consolidation here, this area here as well as here. This is important with this candle here from Wednesday. This will act as support and coming back to this area and filling partial gap in case we come back. This is an opportunity for you to buy and reverse back above the 200 SMA and the 116. If we end up continuing, if you did not buy in this area, you're basically chasing. We are looking at the 57.86, the first target, even when we come back down here or we continue up to act as resistance, and that would be the 78-80% rule in the S&P 500. You can see that there are 11 sectors in the S&P 500. If I go to here where it says S&P 500, it did 1.47%. Consumer discretionary was a little bit flat. Financial did very well, material did very well, technology, infrastructure, real estate did well, industrial, healthcare, as well as telecommunication. But in the Mega 8, which is the Nasdaq 100, most people talk about the Mega 7 or the Fantastic 7. I had included Netflix in the Mega 7 and it did 2.3%. So what I want to do is go over Apple on the daily, AAP. It had an earning. Unfortunately, Apple, you can see this consolidation from the prior year. When it looked up, we fell back in that range. We have not been able to claim that range. After the earning report, Apple fell, but on the daily bar, if I don't include these ones here, and I'm looking at the 208 area, 219, that 208 and the 219 area here filling this gap going back up. It's a little bit under pressure due to the manufacturing in Asia. They have to restructure the way they manufacture their phones, their computers, and so on due to the tariff, unless there is more negotiation in that sector. If I take a look at NVDA, it's going to show a lot of noise on it. NVDA, my charts are usually, NVDA, my charts usually have a lot of cones, Fibonacci's, and so on. If I eliminate everything, they're going to say, why did you eliminate them? I keep them there as historical data that I use for my trading, for my knowledge, in order to help part of the group that I'm with so they can see where the levels are. If I go to the weekly chart, you can see from the announcement that we had called, and I had said to Nassim Taleb, thank you for the mathematics that I learned a little bit, and from Sami Farah, as well as the great Martis in Australia. We talked about this reset. Unfortunately, when we rallied back up, I was thinking it's going to create like a head and shoulder and fall through it. It didn't. It rallied higher, double top. When it double top, it couldn't sustain this consolidation area here at the 140, fell back down to where the 61.8 fib. This was last year's fib from high to low. We are right now above the 50, holding in that consolidation in NVDA on the weekly chart has a little bit strength, but unfortunately this consolidation in here on the daily chart makes me worried about it a little bit more, because this is an area it has to clear, because the semiconductor as well as Taiwanese conductor. I'll show the Taiwanese semiconductor. You can see that it had an island reversal, an island reversal, an island reversal, and on that gap it rallied up. But we are still not above that 180 or the 23.8 or the 61. It depends how you look at the Fibonacci's. I'm not going to go through it, but I'm going to show the SMH. You can see SMH, it's still in that symmetrical triangle wedge. But if I connect this point to this point, it broke out of this area, it found support. If I draw a downtrend channel from this candle to this one here, you can see then when it broke out, it rallied. Or even if I activate it, let's activate it. Oh, I removed it. Okay. I connect it to here. The back side of this candle here is acting as support right now. Even coming back down here, reversing back up is okay. But if we continue and we get to the 232, that would be the backside of F6, which is the 61.8 and the 116 SMA and the 200, which will catch up in the semiconductor sector. If I take a look at LK, which is in the tech, I'm a little bit talking about a little bit tech because money's starting to rotate. But if this is going to act as resistance, you want to pay attention to the F6, because F6 is a 61. We have a 78% up here. You can see it on the charts I usually do the prior year when we fell down. If I take this high all the way down here, basically XLK lost 29% of its gain. But from the low in April 7th to this high here, we did 26.9%. So more importantly is that we pay attention to that Wednesday candle and this consolidation in this area in case we come back to it to find support and continuation in the tech sector. Remember, real estate, there's XLY, XLF, and so on. So XLY is extremely discretionary. Pay attention to it. It's a little bit on the weaker side. XLY, I'll show it here. And you can see that it's still underneath this consolidation and this breakdown here until we end up in this territory and part of this gap, which was filled in here. This is going to be a little bit of a landmine until we clear that area. So let's go take a look at right now. Amazon reported too, but didn't want to go into it. It had, because due to the tariff and stuff and announcing the prices of tariff, and this is going to be an issue for a lot of consumers, especially in California and some out of state. So we can see that this consolidation in this area is very important for Amazon to continue higher. If it finds weakness, I am looking for the backside of this channel before, because it's got this island reversal here in this gap. And at the same time, when it fell from here, there's a tiny little gap. If I zoom it in here, you can see it in the candle right here between this one and this one. It's just sitting right on it. So coming back to this area is very important in the 200 SMA. If not, this gap, I'll look for this gap and eventually the second gap to come in this area before bouncing back up. In Amazon, if you have missed Amazon, if you did not accumulate any positions in Amazon, and like Google, Amazon, and so on. So I'm not going to go through them. So let's take a look at the SPY. I will show you how to do the measured move on SPY instead of the E-mini, and I will use the Nasdaq NQ or the micro NQ to show you how to do the measured moves. We can see here after the tariff announcement moved down that gap here, we filled it by this candle when we came up in here and rallied back up. But I do have this area. If I take this area to here, there is a tiny still gap which is possible to fill that area. You can see it right there. which has filled, okay? But between here and here, there's a tiny one which has filled. I wanted to show it so people, and there's one here between here which is filled by this candle here. So more importantly is to understand the levels, not be biased to either side. So what we're going to do from here on this gap, go to an intraday time frame. On the daily, I'm going to go to 20 days. I'm going to use a 4-hour chart to show me the levels. And what I want to do is do the measurements. This is the Wednesday candle move up, but we still have this gap. If I take the overnight, the gray area is the overnight action. I usually have it in the E-minis and so on. So what I want to do, go get the measuring tool from here to here for the week and measure it and extend it to the left. So I use the measuring tool for the weekly highs and lows extension. So you get highs and lows extension to the upside as well as downside. You can go up to 300% sometimes if the momentum is there. So I don't want anyone to be biased. We're going to trade what we see, not what we think. And I'm changing the color to 1 on these so that way everyone can see why I am putting these colors this way. Okay, so we're going to set them up in blue. We're going to push OK or Cyan, and you can see that the consolidation from this big candle at the S&P 500 at the 51.14, 51.12, when we rallied back up, this was a good area to, because this was a double bottom, because when you looked up on that Wednesday candle, we came back, retested half that move. So this candle and this candle is considered a double bottom, and the rallying from here basically to here, you got more than 12%. So if this candle going to be finding support and this candle here and that big one there, I'm looking to make sure we don't eliminate this gap. We can come back to this area and bounce off the 51.38, 51.40 area and continue higher. If it comes below this area and fills the gap and continues lower, you're not going to be biased. You're paying attention to this high in the mid, the highs and lows of this candle and the midpoint of these two consolidations. So this is very important in trading, to trade what you see, not what you think. And I will do the Nasdaq 100 micro NQ. And what we're going to do in the micro NQ, I'm going to go to the daily or the weekly to show you how it looks like. I usually do the measurements for the micro Nasdaq 100 because I do have a lot of charts. You can see this was the April high, the April low, and 100% retracement. In case we stay above the 50 SMA and the 18, there's 123, there's 114 here. There's 123, 138, 150, 161, 178, and 200, and so on. So you can duplicate it to the top, duplicate to the bottom, in case it dissects the F6 eventually as resistance, because from the high to the low, and we fall back into this area, that is okay. It's not bad, but I wanted to show this on the weekly bar before I do the measurement. This is the daily, and you can see the gap on the daily right here in this consolidation and push up to the 200 SMA. We closed above the 61.8, and I'm going to go to an intraday. From the intraday, go to 20 days. We'll do the same thing on 4-hour chart, and we'll do the measurement the same way we did on the other one. So this is the high for the week. This is the low for the week. So this is, I usually go 1 week back for each candles, but I want to show where the extensions are. So I'm going to edit this property, move it back till the beginning of the month. I'm just doing it to show you the levels, nothing more. I usually use 1 week levels, and I'm going to change the color to cyan or cyan. And this is the level that you should find support in this area coming halfway through that candle. But more importantly, this area here that we find support and bounce off. If there's going to be continuation next week, you look for the upper end on the Nasdaq 100. I hope this video was very helpful. Once again, you can check us out on the website. Get in contact with us. We're here to help. Take care. Over now.